This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode of Back to the Roots podcast is also brought to you by Soybean. Soybean Organic Growth Boost is a liquid humic acid product that promotes the conversion of nutrient elements such as N, P, and K into forms more available to plants, thereby improving uptake of nutrients, micronutrients, and water by plants. It also improves the biological structure of the soil by helping to neutralize both acid and alkaline soils. Soybean SB4400 is a liquid product containing a combination of living beneficial microorganisms that allows plants to take in nitrogen from the atmosphere, enhances natural growth promoting functions in the plant, and can increase organic matter and CEC in the soil. Soybean organic products are formulated to work together to provide a continuous beneficial growth environment to meet all of your organic agricultural needs. For product details, visit soilbiotics.com. You're listening to Back to the Roots podcast. This is Brian Wood, and today we're back with the market report, which we're going to try to do quarterly as we said at the end of last year. It's been a while since we heard from Ryan Koory with Mercaris. Ryan's here today to give us what's happening in the organic grain market. So, Ryan, you want to take it away?
Yeah, thanks, Brian. You know, when we're looking at what's going on in organic grain markets right now, a lot of the conversation, a lot of the interest has been around what to expect for soybeans going forward. And trying to do a little bit of a thought experiment around what soybeans could look like this year. What we did was we ran a bit of a scenario. We took a look at, what we think organic soybean acres might be this year. And from conversations that we had earlier this year, it seems that 20% increase in organic soybean acres being planted this year is a pretty reasonable expectation. But with that 20% increase in planted acres, there are some risks with regard to what that could mean for production and yield ultimately. And, where those risks come from is, if you think about how we expanded acres last year. If we look at harvested acres last fall, we had about a 19.5% increase in harvested acres compared to the prior year. So if we pull off another 20% increase in harvested acres this year, that's effectively a 44% increase in soybean acres in the span of about 2 years. Whenever we think about what these potential acreage increases could mean, there's a lot of risk with regard to yield. And where those yield risks come from, they're one part agronomic and they're one part economic. Agronomically, looking at something that's like another 20% increase in harvested acres, that implies soybeans going into rotations in places that they would not have otherwise been planned. Either it's people trying to do second-year soybean rotations or putting soybeans into marginal places where they wouldn't have normally planted them, whether or not you're pulling out a fallow rotation or you're pulling out some other crop. And so whenever we see deviations to planting rotations and planting plans of that nature, it tends to have a negative impact on yields. And then the second issue, being the economic one, the incentive to put in soybean acres that are less productive is because at $40 per bushel, they're more profitable, right? There are places where you wouldn't put in soybeans at $18 per bushel because you might get a yield of, say, 20 bushels per acre, which makes those not profitable. But at $40 per bushel, those 20 bushel an acre places that you could put in soybeans are now profitable. And so you wind up with incentives to put in beans that are going to disrupt rotations, that are likely to hurt yields, as well as put in beans places that just generally would have lower yields. And so what we did was thinking about, okay, if we have a 20% increase in harvested acres, and we coupled that with a yield reduction, and we decided to go with about a 5% yield reduction. That 5% yield reduction would put us back to 1920 harvest yields. If we get those two factors to occur this year, that means we will produce about 1.5 million bushels more of organic corn in the U.S. this year than we did last. Now, 1.5 million bushels is definitely beneficial given the tight supply situation. However, if we kind of take it in context in terms of what the total supply situation is, it's really not that much. You know, the first thing to consider is when we started this marketing year, one of the hidden things is we started with a pretty heavy carryover of organic soybeans, somewhere in the neighborhood of about 2 million bushels. Well, we won't have that carryover going into this next marketing year. So that 1.5 million bushels won't even offset what we're going to lose in terms of carryover year to year. And we think about the places where we've had a loss in imports, you know, particularly India. India historically accounted for somewhere around 40% of our organic soybean supplies. Well, those organic soybean supplies, 40%, you're talking somewhere in the neighborhood of, 5 million bushels or more. So it's not enough to offset what we've lost in terms of Indian meal imports. And then we have additional risks. One major factor that's evolved since the last time we discussed is the eruption of conflict in Ukraine between Ukraine and Russia. And with that, that puts imports from not just those two countries, but the Black Sea in general under a lot of risk and under a lot of stress. And so when you look at these losses of supplies that we're likely to have over the next year, whether it be a continuation of India, whether it be the Black Sea, or whether it be a loss of these carryover stocks, a 20% expansion in U.S. acres really still isn't enough to offset that very much.
Yeah, certainly. When you hear the 20% increase in acres, when you hear that right off the bat, it's like, hey, great. Maybe that will help relieve some of this shortage. But then you hear the drop in yield and the amount we were importing, which we had talked about a lot last year. It leads me to the phrase that we said before we started recording: the more things change, the more things stay the same. Is that what you're seeing? Is, while we may see some additional domestic production, this high-priced bean market doesn't look to be, the outlook for it is more staying there.
Yeah, we have new problems since the last time we talked, and we have some new optimism, but they don't look much different, and the problems and the outlook is still fairly similar. We still have a market in which U.S. production of organic soybeans, the ability to expand to meet domestic demand, is limited, and it's going to be very challenging to see that change within the next few years. Similarly, we are reliant on import markets, foreign supplies, to offset or to fill in that gap in the middle. And so long as that's the paradigm, anything that disrupts those flow of foreign supplies is going to be disruptive to U.S. markets and is going to add bullish pressure to prices. And so even though we've seen new conflicts and new issues arise, they don't really change the outlook very much. It's still a very tight oilseed outlook with not a lot of options to really see that ameliorate over the next year.
Now, to follow up on that, as far as, we hear an increase in bean acres domestically, and tying that into the corn market, my first, initial reaction would be, oh, some of those acres are going to pull corn acres down and possibly affect that market, being as most of our domestic supply, or most of our organic corn supply, is grown domestically. Is that a correct assumption, or are you seeing something different?
Yeah, when we look at the organic corn market, it is a little bit interesting because even though we're having a very strong supply year this year, we're seeing prices that are remaining pretty strong, in the $10 to $11 per bushel range. And what's interesting in that is when we look at organic corn, even though we have a lot of supply this year, there's a lot of risk in terms of next year's supply, between the trade issues we discussed. And as you mentioned, if we're looking at a 20% increase in soybean acres, those acres are coming from somewhere. And so one of the things that we also asked whenever we were trying to assess what was going on with soybeans is, what people were doing with organic corn seed sales. And really the conversation seemed to indicate that there wasn't much change year over year in terms of seed sales for organic corn. And as a way of kind of ground truthing this same point, I was having a conversation with a group of farmers earlier this year, I think back in January, having the same conversation with them. And so I posed the question to them. I said, okay, out of a group of about 100 farmers, who is anticipating putting more soybean acres in this year? And about 80% of the crowd raised their hand. And I said, okay, so who plans on reducing corn? And there were only 4 people who raised their hand. And it's still, self-evident, right? And it makes sense. If you're pulling crops out of your rotation this year, it's unlikely to be corn that's at $10 to $11 per bushel. It's still a very, very profitable crop. And so the risk of taking out a profitable crop to put in a crop that's very volatile like soybeans right now, even if soybeans are at $40 per bushel, corn is still great to put in. So we're not likely to see, and we're not seeing any indications that we'll see a huge reduction in harvested area. With that, we do think that we will see some yield loss this year. Basically, what those yield losses are going to stem from is we know that we've had a lot of bleed over pressure this year in terms of getting nitrogen to put on organic corn, primarily manure. There has been a phenomenal escalation in the price of anhydrous, and that escalation has resulted in a fair number of conventional farmers turning to manure as a form of nitrogen this year. And with that, that has tightened up supply and pushed up price for the organic farmer. And so we're likely to see some yield loss. But even with that yield loss, kind of doing a similar thought experiment that we did with soybeans. So if we say, okay, we'll have yield or harvested acres hold mostly flat this year, right? We'll harvest just as many acres of corn this year as we did last year. And say we have yields reset back to that 1920 level, which is about a 5% reduction. That means that we would see organic corn production in the U.S. fall by about 3 million bushels year over year, which isn't inconsequential. However, corn is in a bit of a different situation. If we look at the supply situation in the U.S. right now, this year we have a record amount of organic corn in the U.S. Not only do we have a very large harvest, almost 50 million bushels last year, we're on pace to import close to 13 million bushels of organic corn. With that much supply, what it looks like is we're on pace to end this marketing year with organic corn carryover stocks of somewhere around 4 million bushels. So that 4 million bushels is larger than the deficit we're discussing in terms of potential loss in organic corn production in the U.S., which means that basically puts us in a situation where we have less room to import next year. And, if we look at the potential impacts of our supply situation in terms of carryover stock, and we kind of play around with what yields look like and maybe some harvested acres. One thing in the U.S. that we see is domestic supply over the past 5 years has been on average about 58 million bushels. Whenever we go over 58 million bushels of supply, it tends to add bearish pressure to the market. Well, given we have 4 million bushels in carryover, and say we have that scenario, right, where we have flat year-over-year acres and we have 5% loss in yields, that gives us room for about 6 million bushels of organic corn import next year before we go over that 58 million bushel threshold. Putting that in context, this year we are going to import somewhere close to about 5 million bushels of organic corn from just Argentina and Canada combined. You add in some other countries, including the Black Sea, Turkey primarily. That puts imports this year at close to 13 million bushels, which is well over that 6 million bushel mark. Now, thinking about the Black Sea region, again, there are supply risks there, right? A lot of the corn that we import from Turkey is primarily in the form of cracked corn. And that organic cracked corn primarily is not produced in Turkey. It's extract from corn that is produced in other parts of the Black Sea, whether it be Ukraine, Russia, Romania, etc. So say we see those volumes cut in half, right? Say we only import somewhere around 3 million bushels of organic corn from Turkey next year. That still puts us well above 6 million bushels in terms of supply next year. And even if we want to kind of take these numbers and think about them in a little more extreme scenario, right? Say we're being too generous in our assumption around corn acres not falling. Say we see a 10% reduction in corn acres next year, or this fall rather, and a 5% reduction in yields. With the carryover stocks that we're likely to have, that gives us room to import about 11 million bushels of organic corn next year before the market starts to go long. We haven't imported that few bushels of organic soybeans in at least the past 6 years. The least amount that we've imported over the past 6 years was 11.5 million. That was over the 1920 marketing year, and that was in response to corn prices in the U.S. that sank down to about $6.50 per bushel. So there are risks for the U.S. organic corn market to go bullish next year. We could see a substantial reduction in yields. You could see a substantial reduction in acres. We could see a loss in supplies from the Black Sea region that's pretty substantial. However, we really would need all of those factors to occur in a pretty large way for the market to wind up in a situation that's very tight. And if any of those factors don't really go in that direction, then we wind up in a situation in which the market's long. We are going to roll out of this year with a lot of corn in supply, and that corn that we're going to be carrying over as old crop is going to be a factor in terms of the market, in terms of prices next year.
Certainly makes a lot of sense once you lay it all out like that. It's not just as simple as pulling beans out or putting beans into the rotation and pulling corn out. And as we've talked in the corn market, so much corn is grown domestically, and that market is, a bit more stable with domestic supply. Whereas, and I want to bring it back around to the soybean imports, and specifically what is what's been affecting that price and the high price for beans and the lack of bean meal availability, and bring it back to India. And it's been a while since we talked, and just wanted to see is that situation, we touched on it a little bit earlier, and is that outlook remaining the same, in that essentially India has been had duties put on it, imports or tariffs put on it, and they've mostly backed out of the market? And is there any other places that could give a relief to import beans to make up for the difference that we need here domestically?
Yeah, looking at India specifically, the big factor there is exactly as you said, it's the tariff rate. And the ITC, the International Trade Commission, came back, I think, in March. And essentially what they have assessed is a tariff rate that's close to 300% for the vast majority of organic soybean meal exports from India. And with that, there is additional risk in the way that the decision was crafted and the tariff is applied, that the portion that is not being assessed a tariff could at pretty much any time, if the ITC finds evidence to suggest, also face that tariff rate or some tariff rate, close to it. And so even if you are importing right now, the possibility of you paying a back tariff based on a future ITC decision is very real. So really, it's pretty straightforward. That has led to a substantial reduction in organic soybean meal imports from India. I think the last time I looked at them, they were down somewhere around 70%, 80% year over year. It's come to being a minor factor in terms of that supply situation. Now, recently, what we have seen is an increase in whole bean imports from India. Over the past couple of months, I think last month we saw somewhere around 4,000 metric tons. This month, so over March, we had about 4,000 metric tons. Over May, or April rather, we had about 7,000 metric tons, which is a substantial increase from the pace we've seen in the past. But those imports are a response to U.S. prices. And, with that, really the situation is pulling in beans from India is risky. They tend to be very nice high protein beans from what I understand, but they tend to be subject to pest issues, either having parasites or having bugs within the beans that you're importing, or having weed seeds. And so if you are importing a container ship of beans or whatnot, and you get it to the port, and FISIS, the Federal Inspection Safety, they go and they look at that load of beans and they find that it has contamination. That load of beans is now rejected. It can't come into the U.S. So it puts a lot of risk around sourcing those beans. So basically what that means is if we look at the bean imports we're getting from India now, it's because we are looking at soybean prices in the U.S. that are around $40 per bushel. Not necessarily a solution to $40 per bushel beans. If we see prices start to back off, we'll probably see the pace of those imports drop off. It kind of might help keep prices from going too much higher, but it really isn't likely to be a mechanism to push prices lower. And then, looking laterally from India, another place that we source a lot of not just soybeans, but oilseeds in general is the Black Sea region. And with all the discussion that points that we had earlier, that area is under risk. Not only Russia and Ukraine, which are pretty large suppliers of soybeans in and of themselves, as well as canola and sunflower, but also Turkey, who ships a fair amount of organic soybean meal to the U.S. Again, that soybean meal is a lot like the organic crack corn in that it's not being produced from soybeans grown in Turkey. It's sourced from soybeans from the Black Sea region. So it puts pretty much all of those imports at risk. Really, if you kind of take the broader perspective, you think about the other places that we pull imports in for oilseeds, you're looking at Canada and Argentina. Argentina, it sounds like, is going to have a pretty decent crop. Even with that, offsetting the loss of India and the Black Sea is going to be challenging, especially, depending on how large the loss of the Black Sea ultimately is. And then Canada, Canada can increase its exports to some point, but, Canada is a fractional producer of organic crops compared to us. So their ability to really offset the loss of other foreign markets is limited.
Well, certainly new factors involved, but as I said earlier, and as we talked before the call, I'll say it again: the more things change, the more things stay the same. But really appreciate the information, Ryan. We'll be back next quarter with more updates, and hopefully everybody will join us. And again, thanks a lot, Ryan, for the information, and good to talk to you again.
Absolutely. Good talking with you, Brian.